Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Come to think of it, why not do each earnings report and call analysed over a whole week? These are usually the periods where we get the most information from the most credible sources. There is no bigger insider than Elon Musk. We also get lots of good questions too. I think it does make sense, rather than quickly giving a rehash of what was already said. And for those of you who've been watching this Q2 series, well, I'm sure, like me, you're also picking up things you didn't hear or remember on the call either. It's an overload of information at once, too much to comprehend to any extreme scale, only to quickly be given another great piece of information on a continuous roll. So let's keep going then. Deutsche Bank asked if Tesla are facing any pressure or have seen any slowdown in orders as the result of the pressure the consumer has been experiencing, and if he is worried about it in regards to the risk of the economy that Elon has previously expressed. No prize for guessing the response is that Tesla are not concerned about demand and are very much focused on production. Elon saying that if you order a Model Y, it won't arrive until sometime next year, and that demand is clearly not an issue for Tesla for many months. Then Zach chimes in and rephrases the question, are we seeing a macroeconomic impact on our demand? He replies, not that he can tell. And then Elon and him say together, some, a little, maybe, but it's not really noticeable. Then Zach also likes to talk about the very long lead time they have, and the world is very uncertain right now, and they will have to see where things go with commodity prices, ramping production, and the state of the world then. But demand is not something they're concerned about. Elon then talks about pricing and value, and explaining that even if value was infinite, if people cannot simply afford it, they can't buy it. This is why Tesla cannot raise prices to an arbitrarily high level, or else you surpass the affordability boundary, and then demand falls off a cliff. Elon says that they have raised their prices a few times, quite frankly to, quote, embarrassing levels. And partly this was due to supply chain and production shocks and crazy inflation. Elon goes on to say that he is hopeful, although not a promise, that they can reduce the prices a little bit over time. So despite Tesla's high prices increasing margins and profit, yet still not affecting demand, Elon still seems to feel obliged to lower the prices so more consumers can afford a Tesla. Of course, there is still the crazy waiting list, which is being managed with pricing too. Next, Elon is asked about the current installed capacity. It is brought up that Tesla now display their current installed capacity at over 1.9 million units a year. This comes from the Q2 report, showing the capacity of each factory. The total is now 1.9 million. However, Shanghai, Berlin and Texas are being coy with their capacities and just claiming over rather than an exact capacity, unlike Fremont, which has less potential of expansion when compared to the other factories. Anyway, the question is then asked as to how long until Tesla will actually reach a run rate of said capacity. Now, given that we're all aware that Tesla is supply constrained, this is actually a good question. So Elon is asked how quickly he thinks he can achieve that capacity. He replies saying, I think we have a good chance of exiting this year at 40,000 vehicles a week. Then it goes radio silent briefly, almost as if Elon was waiting for an applause as it was such an impressive figure. 40,000 vehicles a week. Well, what does that come to? Well, with 52 weeks a year, that is very close to 2.1 million units a year, or in excess of 500,000 units a quarter. And this is all happening within the next 6 months, or even 5 months from now. 500,000 units a quarter. We will need to do some forecasts for that. Bear in mind, that is not to say 500,000 units in Q4 necessarily, just the run rate of all the production lines by the end of that quarter. This will be great for the stock price. I really want to know how much profit that does equate to try and put a value on the company at that run rate, as surely it's got to move the stock significantly and only about 6 months away. I know you can already read exactly what I'm thinking. January or Feb 2023 calls. Anyway, this isn't guaranteed, but it's just what Elon and Drew think we have a good chance of hitting. But remember, as exciting as this is, and Tesla getting their production speeds ramped up, for it to continue, will still be dependent on the 4680 cell, which yes, Tesla do seem confident in sorting by then, but just be prepared for potential delays. Of course, we can also hope for the 4680 to ramp up even faster and earlier than expected too. Hope for the best, but prepare for the worst. Your preparation may be what you want to put aside some cash for a potential dip around that time. However, there does seem to be somewhat of a trend where the stock price builds up around Q4 and then crashes towards the start of the new year. Drew then further confirms that Tesla's internal plans are to have that capacity utilised by the end of the year, i.e. around 1.9 million run rate. But it takes time to ramp, and it will be a challenge, as there's a lot to happen to get there, which is what they are working on. Elon points out that they already have had many 30,000 car weeks, and says that he thinks 40,000 a week is within reach before the end of the year. Okay, yes, I feel it too. We really need to work out how 40,000 vehicles a week values the company. And Tesla have already had many weeks where they hit 30,000. Now that would imply that they were capable of hitting that number before the Shanghai line upgrades, which are supposed to increase Shanghai production as much as 30%. Fremont is running around 10,000 a week. Perhaps the two new factories collectively at 2,000 a week would then imply that the remainder from Shanghai is a crazy 18,000 a week, or over 2,500 a day. But this is before the upgrade. A 30% upgrade from 18,000 a week is an additional 5,500 units a week. So how about we round that down to 5,000 extra a week from this upgrade for Shanghai, when eventually ramped up somewhat by the end of the year. In other words, potentially 35,000 units a week just from Shanghai and Fremont after Shanghai's upgrades. And we haven't even included any potential production improvements from the two largest, newest factories. They would just need to increase a combined 5,000 a week to reach that. Sure, perhaps Fremont could contribute a little too, maybe an increase of 1,000 units a week before the end of the year. So this goal doesn't seem too far-fetched, especially when you factor in the new factories are using 2170 cells. Alright, next Elon talks about ramping up in reference to the new factories. And we have to face the fact that there is always a lot of uncertainty. These are new factories with new production techniques. We and Elon did expect them to ramp up faster than Shanghai, however, this has clearly turned out to not be the case. Drew says that if they ramp up the factories to what was shown in the deck, then they will be at that rate. Drew is saying that if the ramping for the new factories goes about as well as they're aiming for, then they will hit run rates of over 250,000 a year for each factory. That's about 5,000 units a week. Now, the math here is not that difficult to realise Elon and Drew have just given us a discrepancy as to the end of year run rate. They previously said 40,000 a week, but now they're saying the new factories alone could be at 10,000 a week. Alright, I'll just go through the math again, as it is important. We've already seen 30,000 units a week, and this is when Berlin and Texas were contributing at maximum 2,000 of those units. That then leaves us with 28,000 units a week coming out of Shanghai and Fremont. On top of that, we have an estimated 5,000 additional units a week from Shanghai with the upgrades, taking us to 33,000 a week from Fremont and Shanghai. Then, if they are really able to get Berlin and Texas to 10,000 combined, when we plug the 10,000 from Berlin and Texas, then we get 43,000 vehicles a week from all factories combined. Admittedly, we are taking the data from the best months, but it's what Tesla are capable of that is the most important. So seeing that they can achieve it is a big deal. If Tesla reach that run rate, it's a number that surpasses Tesla's 2018 Q2 total production for the quarter. That would be a great result for us all. And this is what Tesla are telling us. So it looks like we will also have to try and put a valuation on that. But Elon talks about the uncertainty again. Production looks like an S-curve, and the ramping up part in between is very difficult to predict. Almost if it's just a simple knob you can turn, but only until it's ready. They are refining the production process and improving all steps, but it needs to work perfectly so they can turn that knob on the production floor from 1,000 a week to 5,000 a week. And we've seen jumps like that month over month from numbers that were reported out of Shanghai when the Model Y was ramping up there. And hopefully the knob for Berlin and Texas can be turned a little further and faster than all the others, at least eventually when it's ready. I have a feeling production from these new factories will sneak up on us and suddenly blow everything out of the water, and we likely start to finally head to our new trading range. This is what Tesla are working really hard on right now. Elon goes on to say again just how confident he is Austin and Berlin could each hit 5,000 a week by the end of this year, and if not, early next year. And hopefully 4680s can carry on that level of production from there. Alright, it looks like we're going to have a few financial models we need to do sometime to work out how much Tesla will be worth once they announce their Q4 2022 results. And there's still more analysis to come. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.